A recent report found that Gen Z and millennials are more likely to get their financial advice from family and friends than experts. That advice might be free, but do they regret not getting professional advice?
Welcome to Your First Home Buyer Guide, the podcast for first home buyers who want to move it along and become homeowners. But most importantly, it is for you to become an educated home buyer.
I'm Meighan and that was Veronica. We're both buyer's agents and probably old enough to be your mum. But it's a good thing because between us we've got over 45 years experience to share with you and bucket loads of stories about avoidable mistakes. Together we're going to make sure you get unbiased and real information you can rely on. Allow us to guide you on your home buying journey. We want you to become an educated home buyer so that you can stop looking for your first home and actually become a proud homeowner.
We've got loads of great tips for you in this episode, and if you'd like more useful tools, head over to the website homebuyeracademy.com.au, and there you'll get access to our free mini course, How to Price a Property Like a Professional. You will also find the holy grail of home buying education, Your First Home Buyer Guide, the online course for people who want to become educated home buyers. We created this for you to help you get on the right path to home ownership for your first home and beyond.
But before we get into the interesting stuff in this week's episode, we've got the boring bit, the disclaimer. You of course know that nothing in this podcast is to be taken as personal advice. We always recommend getting the advice of an expert in their field who takes the time to understand your personal situation. We've done our very best to ensure that the content is correct at the time of recording. Things change rapidly, so always check with the relevant government authority and your trusted advisors to get the most up-to-date information.
Today we're talking about a report on, amongst other things, Australia's financial knowledge. And that's caused us to become a little bit worried about Gen Z and millennials. But before we get into that, there's a special house behind you this week, Meighan. It does not look like a house. God.
I'm back in the Airbnb OMG category. So much fun looking at what's in there. And this one's in South Korea, and it is a cottage, an entire cottage that you can stay in that's in the shape of a guitar.
A guitar.
And one of the areas that you look through is, for those that are watching, you know, the little circle. I know it's got a name, that bit in the guitar that's the circle that the strings
in the middle
go
of the
across.
guitar.
Yeah, there's actually a balcony inside there.
Oh,
very cool.
How cute. All right.
Not your classic first home.
If you don't watch us on video, sometimes you can just tune in just for that little bit. You can have a look at what the hell Meighan has found. She spends hours and hours of...
I do not.
Anyway, all right. So a recent report by Great Southern Bank surveyed 2,000 Aussies about their financial knowledge, and they found a correlation between financial knowledge and confidence about their financial future.
Not really surprising.
No, but I guess what we were surprised by, quite a bit of the stuff that was in the report did really surprise us, okay?
And concerned us. You know, like we often have students, Veronica, that refer to us as their mums because we do say we're old enough to be your mum. And often, you know, we'll be sitting in campfire and a student might say to us, like, I went through this property and I had my mums in my head saying, you know, look out, watch out, how about?
And
I feel a little bit like that with this because what was found was that Gen Z and millennials, so this was across 2000, all ages, right? So, but we're particularly interested in this information.
The Gen Z findings.
Yeah, look, they're more likely to get their financial advice from family and friends. Now, you might be wondering why this is so concerning to us. You might just do it yourself, and it is the first place that people go to, but it shouldn't be the only place. And I guess that's what we really want to dig into here is what is it that people are doing, why are they doing it, and why are they not seeking that expert advice? Because we talk about building your support crew as step one in the course, Your First Home Buyer Guide.
I think, you know, and there's a lot of talk about the fact that financial literacy really needs to start at school. And there's very little, in terms of our formal education system, there's very little focus, if any, on financial literacy. I mean, you learn maths, but you know, you may not necessarily learn how to apply it in day-to-day living. I mean, I did learn about compound interest at school. I do remember, you know, learning about that. And I always can never remember the formula. Thank God for Excel is all I can say. but
We have calculators now.
The difference between compound and simple interest, which is actually a really fundamental thing to understand for both paying back a mortgage, but also the capital growth in a property. There's so many ways it gets applied in the property space. But I don't remember actually being, other than paying back a loan, I never actually, recalled it being applied in practical ways that I could, as I moved into adulthood or, when I grew up and got out of schooling, that I could start to see how these things worked. And that's only a tiny little bit of financial. Yes.
Yeah.
And, I was hearing recently, I heard somebody that was presenting at a presentation to first home buyers, and they were asked the question, do you know what the cash rate is? And like a tiny proportion of the room could put their hand up to even explain what the cash rate is. And so in case you don't know what the cash rate is, I'll explain it to you right this minute. But the fact is that these are important things that drive our economy, and they also apply to us individually.
Yeah.
And the cash rate that's basically the official cost of money. The Reserve Bank sets what's called interest rate, so that's the cash rate, every time they meet. I think they now meet 8 times a year. It used to be every month except January. And so when they set that cash rate, that then sets the cost of money. So when banks are buying money to be able to lend to people, they'll put a markup on top of that. And so then that'd be the interest rate that the banks will charge. But the cash rate is the foundation of all that. So to think that there was a room full of first home buyers in this particular presentation that were asked that question, and it's really very integral to understanding that, to knowing sort of what's going to happen in the future when you become a mortgage holder. It's a simple concept really, but it's not taught at school. So when you get a situation where, as a young adult, you're looking for advice, it's naturally you go to other people because you don't know. But the problem is that if our education system is such that most people don't get taught this, then you're going to other people who also don't know. That's really where we're concerned.
Yeah, and I think, some really good points made there. The financial literacy side of things, it also does start at home. So, of course, a lot of the foundations that we learn as young adults do come from our parental input, and that's important. But I guess what they don't know is what they don't know, and where they got their information from and the basis upon which they have their understanding may not be as expansive as you might get from consulting somebody who does this for a living and who is an actual expert in their field, of the financial advice field. So what we're not saying that necessarily it's bad advice that you might be getting from family and friends. It might just be too small a component of what you need to know to be fully informed to then be a very educated and intelligent home buyer. So it's not, I guess, we're not concerned that you might be getting bad advice. We're just not concerned that maybe these two generations are getting very limited exposure to the breadth of advice that they need to get for their situation. Now, interestingly, less than a third of millennials were actually reported seeking out financial advice in the previous year leading up to when the survey was done. Now, I'm not surprised, but I am slightly concerned that less than a third of people in that age bracket who would potentially be looking at large purchases, like whether it's a car or a home or whatever those purchases were, aren't thinking about that big picture, that financial planning picture, that advisory picture, and particularly not thinking about things like potentially life insurance, which is something you will often organise through a financial advisor, or if they do own a home, having the right insurances in place to protect them if something happens to their income. So it's even a broader picture than just having a financial plan. It's actually making sure that you're covered in the case of something happening to you, either permanently or temporarily, and making sure that you can cover off any debts that you have.
The other thing too is that for millennials, they have the longest runway. Like if you compare Gen Z, Gen Z are older, so they've got less of a runway to their retirement. And you're not thinking about retirement, obviously, when you're a millennial. What would you be worrying about when you retire? All of a sudden it comes up and you go, oh, Jesus, that's a bit close. But the thing is,
when you hit 50, it feels very close.
It suddenly feels close. You think, oh, dear, here we are, your mums are telling you about this stuff. So when you're younger and you're not really thinking about that, or you're thinking, oh, God, I'm just not earning enough money to have spare to invest.
Yeah.
And so we could be talking about investing in shares or investing in other ways other than property, but your opportunity to be investing, dollar cost averaging is another term that maybe you have or haven't learned, but that is like over time, small amounts of money that you invest over time and you continue to invest. That means that, there's times when markets going up, times when markets are going down, but over time, as you continue to drip small amounts of money into it and you average it over time, that's what they sort of call dollar cost averaging. So rather than thinking you have to save up a big chunk of money and then you can invest, and certainly when you're investing in property, it sort of is you got to save a big chunk of money and then you can invest, whereas there's other ways to invest. So if you haven't ever heard of these concepts, then you will hear about them if you start looking at getting financial advice and doing it younger so that you can start to really build up a nest egg in other ways, right? So the very fact that they're not, or a large proportion, 2/3 are not, is, I guess, a little alarming. Not surprising, because I think back to when I was that age, did I think I had the wherewithal, spare cash to invest? Probably not. But if I realised that I could have invested maybe $20 a week back then, you know what I mean? I would have if I realised,
and it could be done
and
with
if I
a
knew.
big plan in place. One of the things that we get asked a lot, Veronica, is how can I speed up my savings towards a deposit? And this kind of discussion with a financial advisor can give you options on how you might be able to invest to do that over a period of time. So we're not talking about
Or
turning
just money
$30 into $300,000 in 2 years. Like it's that's gambling. But if you have these conversations early in the piece, you can potentially say, all right, well, if I invested this amount of money in this way, then it may return me 8% or 10% or 6% over this period of time. And that's a way to increase your ability to save your deposit. Now, there are implications for investing and taking money in and out. And that's what a financial advisor is there to do, is to actually tell you about those things.
And they talk about the risks.
As well.
We are not qualified nor able to give you financial advice. So whatever we're talking about here are general concepts, just throwing stuff out in the air to say that if you had never heard or thought about this sort of stuff, that's a good reason to go and get some financial advice. Now, another thing that was really alarming in this report was that 30% of millennials and Gen Zs who have bought a home have done so due to FOMO.
Oh. Actually, this was just a millennial statistic.
Okay,
this is
whoops.
just
Sorry, misread that.
30% of millennials said that they'd bought a home due to FOMO, right? So fear of missing out actually made them make a really big financial decision. Alarming.
Now, sometimes luck might be in your favour, and as luck would have it, that worked out well for you. But there are many times when we see people making big decisions driven by FOMO where they are not lucky and in fact they regret those decisions. So buying a property, FOMO can make people rush where they should not rush. And that's the bit that it's really important here. And so that's about getting good advice on the property side of things. And unfortunately, there are a lot of myths out there, and a lot of people, this is with the danger of getting advice from family and friends, is that everybody's got an opinion about property, and most people are willing to offer it for free, and it's usually worth what it cost, which is nothing. And the thing too is that, as distinct from financial advice that we just said we're not qualified nor able to offer,
not stepping into that lane.
There is zero restrictions. There are zero restrictions on being able to give advice on property. Isn't that appalling?
Isn't it? And it's something that you and I are very passionate about, because we feel that the barrier to entry for people to actually step into the space of giving property advice is way too low. Anybody can walk out of a course, a 5-day course, and pretty much pay their registration fees and be a licensed agent in Queensland. It's different in every state. But they have not got to do anything except qualify with this course and be deemed a person who is of good
repute.
Acceptable, yes, repute.
Good repute.
And that's what alarms us about that, is they know less than you probably do. If you've been listening to these podcasts, those people who are potentially out there giving advice are less able to give you advice that is specific to you to start with. They're going to be selling something along the way, and you understanding what it is they're selling you is pretty important. But they don't have the knowledge that you would have if you listened to these podcasts and done your first home buyer guide.
In a way, and in fact, it's even worse than that, Meighan. Okay, so let's break this down. If you're dealing with a buyer's agent, because a lot of millennials and Gen Zs actually think, you know what, if I knew I could afford a buyer's agent, that's what I want to do. And that's great if you can find a good one who's experienced and local specialist and qualified, blah, 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 right? However, as Meighan's just saying, that's how easy it is to become a buyer's agent. And in fact, in that whole buyer's agent course, which is not a buyer's agent course, actually, it's a real estate course, which means you learn how to sell property and manage it, but you don't actually learn how to buy it. They can be qualified but not experienced. And so you as millennials and Gen Zs, right, and all of you, doesn't matter whether you're in that bucket or not. We've had some Gen Xers buy property and after doing our course, but all of you have to take responsibility for your own learning. And this is the danger here, that where a first home buyer is getting advice, if you're getting it from family and friends, that's bad enough. But if you're paying for advice from people who actually don't know any more than you could know, then that's sort of worse even, because you're putting more trust in them because they come across as if they're an expert. Your job is to work out who really is an expert, who isn't. Even worse, there are property investment advisors out there. If they're not members of PIPA and they haven't done a qualified property investment advisor course, they potentially could have left school in year 10 and done no more education and become a property investment advisor. Alarming, but true, right? So therefore, you have to be super careful. If you're going to get advice from an accountant on accounting matters, they've got to be qualified. If you're going to go to a mortgage broker, they've got to be qualified. If you're going to go to a financial planner, they've got to be qualified, right? We encourage you to go and talk to these people in their lanes for the things that they can help you with. When it comes to property, your job as a consumer is to work out whether or not you have to educate yourself, or you have to be able to work out whether that person you're going to is really an expert. Scary, I know.
Yeah, and age does not equal experience. So just because someone's walked out at 40 and hung out their shingle does not make them qualified to give you advice in our eyes. Anyway, we'll get off that high horse now, won't we?
Yeah, we're back on that.
Yeah, so back to the report. So remember, this is some statistics that we saw off a report done by a bank. An interesting one, Veronica, was that millennials, Gen X and Gen Z, so we've got a few different statistics here. The percentage of people who got financial support to buy their home, and that financial support not just coming from the bank, but actually from their parents as well, was quite high. For millennials, it was 36% of those who had bought a home had help from their parents. Gen Z, 32% had help from their financial help from their parents.
And we would imagine that percentage to grow too as more Gen Zs get into the property market.
Absolutely. But the interesting one was Gen X. Only 20% had help from their parents financially to get into the property market. So I actually starting to see that increase. Well, equity. So
they
my
wouldn't guarantor,
parents,
but that's still help.
It was to enable us to borrow at the time 110% of the purchase price of the property. The valuer obviously values the property that you're buying, and then they put the equity of their property. The value of their property up as equity, so that we could borrow 110%. So my brother and I bought the property together, so it was nice and equal and even and above board, because that can also cause problems within siblings within families if one gets preferential treatment. So I sit in that 20%.
I don't. But anyway.
Well, and here we are on our
Gen
journeys.
X. All right. So also in the report, it showed that nearly all millennials, they feel they could have done things differently when it comes to their finances. And that's alarming that was over 90% felt that they could have done things differently. That's great, because you are at a point, if you're in that category, where you can start to do things differently. So it's learning the lessons from those who regret what they've done or haven't done, and start from now to do things differently.
Now, interestingly, one of the things that they wish they'd done differently, 59% of millennials wish they had researched more before buying an investment property. Now, this is you're here, you're learning, you're sponging, you're taking everything in that you can, you're researching to a degree. So some people have just gone out there. Nearly 60% of people have wished that they'd done more of this before they actually invested their money into a property. So congratulations to you on getting yourself armed with the information before you make that big decision. There is still more that you need to do, though, because we only scratch the surface here. This is not the entire how to do it course. That's something that you can do, and we'll talk about that as we go on. But more research is what you can do to arm yourself with information before you go ahead with an investment property.
So there's a couple of reasons why you might get to the point where you regret not having done more research. And that is because it is overwhelming, that everything you need to learn and do and work out before you buy a property. Now, let's just sort of take out the word investment for a minute, because I think that this applies to homeowners as well as investors. And, you know, it is overwhelming. And when you're in the middle of it, as I'm sure you're all agreeing with, if you're in this situation yourselves, you think, God, what do I pay attention to and what do I not pay attention to? And some people get to a point where they say, I just rip the Band-Aid off, let's just do it.
Yes.
Right? And it's
like
only
analysis paralysis, but in opposition.
That's the thing. So afterwards is when they step back and think, now I get, maybe I should have spent more time focused on that. Like, I mean, a big one would be strata. If your investment property, for example, is an apartment and you're thinking, God, it hasn't gone up in value in the 5 years since I bought it, you know, you're going to be thinking, why didn't I do some more research? Like, what could I have learned about that? That's really valid. So it could be that in retrospect, you're realizing it's not performing that well and you're thinking, you know what, I could have taken more time and I could have learned what I now know because now I'm in it, right? So that's one aspect. But the other side of it is this idea about information overwhelm, and then people stop researching because they just think, oh, look, seriously, I don't understand it anyway. Like, you know,
but there's so much free information out there as well, Veronica. I think if you start researching and looking for information, the overwhelm, what do you actually focus on? What do you take on board? And
when
looking deeper.
And when do you stop?
When do you stop?
When have you got enough?
Who's behind the information? What are they providing and what are they trying to sell? And we talk about this a lot because it's really important to understand what the reason is that people are giving you information. It's heaps of information about from mortgage brokers and banks on finance. There's lots and lots and lots of information out there.
Yeah.
It is not unique and targeted to you though, right? So it's not personal advice. That's something you get from a mortgage broker when you talk to them directly about your situation and your unique circumstances. But there's lots of free information about how to buy a property as well. But if you look behind, if you open up the curtains and look behind, whoever it is that's put that information out, they are selling something, and that's why they're offering free information. And you need to make sure that it's thorough enough. The free information is worth, I think you said it earlier, it's worth what you pay for it, nothing. Because it's usually not end-to-end thorough enough.
No, and even here, right, we're giving you free information. This is a podcast. We're selling you a course. We're selling you more information, really, but curated and organised in such a way that you can apply it. And that's the difference, right? So you can listen and devour every podcast episode, and some people have. Some people have sent us beautiful, lovely thank you emails, and we do appreciate that. We would just wish you'd made it easier on yourself by doing the course. And I know that means more money in our bank, yeah, sure, but honestly, we're not getting rich off this. This is more a gift to you guys than anything. But this is, you know, we know that there's a process. We know that if you get it right, you will make better decisions and you are much less likely to regret what you do and think you'd wish you'd researched more. In fact, we could survey our students and I would put it down. I would say probably a tiny percentage would have wished they'd researched more.
I don't think we've had any feedback on like that, Veronica. Actually, we hear from most of our students after they've purchased, because we really like to see what they've purchased and how did it go and what were their challenges. And I don't think that in the 3 years we've had any feedback.
No,
that they wish they knew more.
I'm saying I'm allowing for it, but yeah, I agree. I think most. Anyway, so what you can go from 60 being one of the 60% or one of the 40% that didn't wish they'd researched more. All right.
Because they'd done enough.
41% rue the fact that they had not obtained independent financial advice before making a financial decision.
And that's I mean, we talked about it. We don't have to go over it.
It's a big number though, isn't it? And
it's
so
a huge amount of people who regret not doing what they could have done prior to investing that much money into a property or any other investment vehicle.
Now, this next statistic I can totally relate to, right? 72% wish they had made more regular savings. Now, I'm not at that point of life where I save anymore, right? I pay down debt. I've got some debt and the debt is working very hard. So that's my forced savings. But I've got a number of investments out there as well. So I guess my way of saving is to invest as opposed to save, But there are plenty of times I look back that, that was indulgent. I wasted money doing things that, really and truly did it really contribute to my quality of life. There's been a little bit of leakage because, I hadn't paid too much attention into my spending habits, or did I really need that new pair of shoes or whatever. Sometimes I do regret that stuff. I look back and sometimes think, what, that was frivolous. I could have done without spending that. Would have been nicer to have that in my offset account or perhaps in my, into my small contribution to my share portfolio, for example.
And it's different at every life stage. And you've really nailed it there in saying where you are at the moment is debt reduction, because we're closer to retirement than we are to the millennials and Gen Z and the runway that you have. So when you're younger, saving is important because you have goals that you want to achieve. And the more that you can articulate and have in front of you what those goals are, the more motivating it can be to not buy that pair of shoes or not have that, what was it, Avo on toast, or cut back the coffees that you get from the cafe and make them from home. So at different life stages, you are going to do different things with the money, the disposable income that you have. But really interesting that 72% of those surveyed wish they'd made more regular savings.
And I think, these are, you can set yourself up good money habits at a young age that do extend into your whole life, right? And it's not, there's these whole movements in being frugal and the FIRE movement, for example. I love that. I love that there's more mindfulness around and intentionality around actually how we spend money. And that's where, for me, if I regret spending money on things that are a bit frivolous, it's really because I thought, how mindful was I at the time? And I think there's a bit of that potentially with millennials, much more likely to be mindful than Gen Xers too, for that matter. I think culturally and generationally, there's a lot more awareness. And so, it's great to reflect, and then it's like, do something about it.
Here's your opportunity. Yep.
Yeah.
Now, I did want to just quote, this was a report done by Great Southern Bank, and their Chief Customer Officer, whose name is Meighan, said, the more advice you seek out, the more equipped you'll feel to make the big financial decisions in life, whether it is starting your savings journey, taking out a car loan, or buying a home. And you know what? I could not agree more.
And that's really why building your support crew is step 1 out of the 10 steps of buying your first home. We put this whole process together. We built it from our experience as buyer's agents. We've both been in this industry over 20 years. We've put in place a whole process around the whole go-to-woe of buying a property, not just saving the money and getting to the point where you can get a loan, but what do you do once you've got it? There's a huge amount of things that you need to get into and know how to do, right? Yeah. But step 1 is getting your support crew, getting the right advisors on board and knowing who to ask the right questions to. So how do you work out who a good advisor is, and how do you know what to ask them? Really important stuff, but I tell you what, it sets you up so well.
It does. Now, a quick note, you might think that we cover everything you need to know in these podcasts, but a word of warning, we don't. We just scratch the surface here. If you really want to be an educated first-time buyer, you need to learn all of the steps and how to do things in the right order.
Our first home buyer guide course costs only $990, and you get direct access to us to help guide you through your negotiations. You can also share the link of any property you're thinking of buying, and we can help you work out whether it's A, B, or C grade or a no-go zone. Trust me, you will buy better with our guidance, and you'll overpay a hell of a lot more than $1,000 if you don't know what you're doing.
In this episode, we've only touched on a tiny part of the huge amount of things you need to know to become an educated first home buyer. There is so much more for you to do. You can learn all of the steps in the right order and avoid all of the mistakes that others have made in our 10-step online course for first home buyers.
If you'd like to learn more about the right process and avoid making rookie errors, become an educated home buyer. Head over to the website, check out your first home buyer guide, the course that we have created for you. And don't forget to subscribe to the podcast so you won't miss an episode. And if you've liked what you've heard today, please give us an iTunes review. It helps other people find us. And of course, I know it's a bit cringy, but we're going to ask for 5 stars. Thank you.
Thanks for joining us. We hope you've found this really useful. And if you have, please share the love with others who you know are in the same boat. We'll be back next week with more priceless stuff.